Chaki. All of you know him, but I would like to say that almost all the speakers, including Mr. Chaki in this list today, they have held multiple positions and they have worn multiple hats during their career. Mr. Chaki, who's part of the Williamson Mager Group and heads as the managing director, Kilburn Engineering. Before this role, he was in a very senior director role at McNally Sayaji. McNally Sayaji, as you know, is one of the largest EPCM players, manufacturing player in the metals, mining, chemical, that space. So they, so between Kilburn and McNally, I would say Mr. Chaki has had extensive experience of projects and manufacturing in the context of natural resources sector. So when we thought that we will put together a panel who have a view of the entire ecosystem and not just the metals part or not just the mining part, we felt that Mr. Chaki is the right person because he has had a very long career in the metals project space as well as the manufacturing space that serves the metals and mining industry. And not only metals and mining industry, the wider natural resources industry, including chemicals and fertilizers. So that is a little bit about Mr. Chaki. The next person I see on my panel is Mr. Maheshwari. Mr. Maheshwari has had a long checkered career in JSW Steel before he assumed this position of joint MD and CEO of JSW Infrastructure. Mr. Maheshwari even currently holds the directorship of quite a few ventures of JSW Group, covering both, I mean, a variety of businesses, including steel business, iron ore mining business, as well as ports. Definitely, he's the leader. He leads that venture of JSW. The initial port with which JSW Infrastructure began is the Jaigarh port, which is the core of JSW Infrastructure's business. And beyond that, of course, JSW Infrastructure is expanding in a wide way. So Mr. Maheshwari's business, the reason of that I included, requested Mr. Maheshwari to be included in a panel is that this infrastructure business is closest to our metals, mining, natural resources business, because much of the material that is handled by these ports are essentially bulk commodities, and that is very closely linked to natural resources sector. So Mr. Maheshwari wears multiple hats, and thank you, Mr. Maheshwari, for making the time for us.
Thank you.
The next person I see on my grid is Mr. Vinay Verma. Mr. Verma is an old acquaintance of mine, and there are an M Junction is a very innovative company. It was started out in the early part of this century, and it was M Junction that revolutionized the entire concept of electronic transaction in the metals mining space. And they have a variety of businesses, starting from the sales side, selling of scrap, selling of anything, to say the procurement process, which is buying of anything. In a wide variety of businesses, M Junction has entered a wide variety of businesses. On the one hand, they can auction a steel plant. On the other hand, they can auction mines, they can auction tea, agricultural commodities. So it's a large amount of transformation that M Junction has seen in the last few years. And Mr. Vinay Verma has been a key participant in transforming this organization from where it started. It started with steel and raw materials of steel, and now it is into such a wide variety of products. So Mr. Vinay Verma, thank you again for making time for this.
Thank you. Thank you for inviting.
Thank you, sir. Mr. Prasad Surya Rao is the next person that I can see on my grid. Mr. Surya Rao is an old hand in copper business. He has worked in the top 3 businesses of India, whether it is in Aditya Birla Group, Vedanta Group, and now in Adani Copper. Adani Copper is I would say the new kid on the block insofar as copper in India is concerned. They are putting up a large smelter in Mundra, and Mr. Prasad Surya Rao heads that business. And it's the first greenfield plant that is going to be put up in India in a very long time now. And thank you, sir, for taking the time out and joining us for this conversation.
Thank you, Niladri, for this opportunity. Thank you very much.
Thank you. Thank you. The last person on the grid for me right now is Trevor. Trevor, thank you again for joining. Trevor is my boss. He heads our global mining practice. Trevor actually wears multiple hats. One is, of course, the Australia hat. The other is the global hat. He has been a long time consultant for large mining companies like Rio Tinto, and all the Australian majors, BHP, etc. He has been, and he has a lot of background in ferrous minerals. And Trevor, though initially an auditor, Trevor is now overall head of all service lines in that sense for KPMG in the mining sector and globally. In that way, I roll up to Trevor. Trevor, thank you again for taking your time out and being here. So today in the group, we have a person representing iron ore in that sense. We have a person representing copper. We have a person representing EPCM and manufacturing in the metals, mining and chemicals and fertilizer sector. And we have a person representing logistics, ports and infrastructure, who incidentally, as I mentioned, also is on the board of several companies who are still into steel, iron ore, etc. And last but not least, we have a person who straddles the transaction space in metals, mining and raw materials, which is Mr. Verma. So thank you again all for joining and giving us the privilege to speak with you. I would like to start by asking Trevor to set the context. My question to Trevor is, Trevor, how are global companies, especially mining companies, preparing for the threat to their traditional business model in the face of climate change? And I have a second sub-question to add to this, Trevor, which is that Australia has focused its climate policy on a new technology roadmap covering hydrogen, energy storage, carbon, steel, aluminium, carbon capture, etc., etc. So based on the difference in the developmental stages of Australia and say India, or say developing countries in all, how do you see this affecting our countries? So two questions broadly to you: climate change, how are companies preparing, and how do you see developing countries going along this path in a sort of a different way compared to developed countries like Australia? Over to you, Trevor.
Thanks. Thank you, Niladri. So very, very big topics, there's no question. I'm watching and talking to many companies in the mining space, and my overwhelming sense would be that they are really trying to keep up. And so when you ask, what are they doing? My observation is that there's, as always with the mining companies, an unbelievable flexibility. There's always the sort of opportunities that they see, and they adapt quickly and move to them. I think climate change and the energy transition has really caught such pace that some of them are a little bit surprised. So we're seeing some catch up. My observations would be there's sort of 5 areas, a bit of a multi-prong solution that companies are starting to bring to bear to this. And first of all, it's really starting with the basics. What's the strategy of the business? So what are their stated goals? And understand from their own perspective how they might go about dealing with the expectations around carbon neutrality and climate change on their business. And that very quickly starts to work through the different aspects of the organisation. And, you know, it's interesting. 5 years ago, I was talking about cost management, cost out. 3 years ago, digital data and automation. So really not a great deal of conversation yet on the strategy around decarbonisation and climate. Now all the conversations are around decarbonisation and climate. It's moving very quickly. It's not replacing the others, it's just adding, if you like, another dimension for companies to manage. But stakeholder engagement and communication has become critical. So setting that strategy, then moving quickly into that really next core strength. So talking to governments, talking to investors, talking to your customers as Scope 3 emissions become part of the puzzle that miners are increasingly being asked to address and solve. And also even just their own people, who are quickly starting to develop some very large expectations on what their employers are doing around climate change and decarbonising their operations. And so third thing, portfolio management. Organisations are looking to understand how their portfolio sits them and presents them today in relation to their strategy and the different metrics that they want to achieve for climate change and decarbonisation, and how could that be enhanced or helped by managing the portfolio of the minerals, the assets they hold, how technology advanced or behind they are, which locations they're in, and tweaking their portfolios to best place them to achieve the targets they're setting themselves. And so we saw some early signs of that some years ago as coal assets were being spun out of organisations. We're seeing some more of that continue, and we're seeing that, you know, that won't stop. You're also looking at organisations starting to be part of the solution going forward for the supply of the minerals in battery storage and in, you know, the electrification of the planet, essentially, so through copper and other metals. So portfolio management becomes a really important part of the strategy. We're also seeing the KPIs, the executive remuneration structures of organisations, being set by boards to ensure that those strategies are being achieved. And this is pretty new. Traditionally, the organisations, the executives of miners have been heavily focused on safety and also on profitability and cash generation. That hasn't changed. Those are still key areas of focus. But we are seeing new sets of metrics and expectations on executives to execute against a clear agenda and strategy of decarbonising their operations and really understanding the impact of climate change on their businesses. And perhaps the last of the 5 areas that I see are the investments in research and development and alliances to try and leapfrog where they are at the moment to where they need to be, whether it's a stated goal 2030, 2050 or beyond. And you know, the landscape continues to move very, very fast, there's no doubt. I think we saw today the UK announce the banning of the sale of petrol and diesel vehicles from 2030. So these, every day there's new announcements which impact on the operating model, the business model of miners, particularly also if they're large processors of commodities into metals, for example. And so there are large sort of allocations of capital being put to R&D and spend to try and develop more efficient ways of producing metals or refining the modes of transport and haulage in their operations. And they'll either be doing it themselves or more and more looking for strategic alliances, partnerships from original equipment manufacturers, for example, and others who are niche players in innovation that can really solve some of the sort of bigger challenges for the miners. So I think you'll see a lot more communicated by miners. They're going to be a lot more transparent about what they're trying to achieve. You'll see a lot more accountability through KPIs and visibility for all stakeholders to be able to understand where the miners are at. They're taking it incredibly seriously. And then I think you wanted to sort of lead into the next question of Australia and how Australia was starting to shift its own positioning in response to the challenges of climate change. And you're right, we have recently, our government has recently released a roadmap that talks about the areas of investment proposition and pursuit of opportunities that Australia sees. And it won't be a surprise to any of the panelists here or viewers even that Australia has come from a long heritage and tradition of exporting fuel. We are significant suppliers to the global energy market of fuel, coal, thermal coal, and LNG. And so they are sort of $85 billion export businesses for Australia and significant employers. And so the policy framework of Australia comes from that background of investment and those, I guess, very established supply chains and production. And it needs to put that in the context of how it then participates in a whole new energy future for the planet. And so if you look at the major emitters of carbon, energy generators, electricity generators, and the transport industry, how does Australia look to participate as exporters in that industry? And I think Australia would see itself always in a lucky position. We have a very stable economic investment climate and environment. And we also have significant amounts of, whether it's minerals that support the production of batteries, the potential for further exploration to find further minerals, for example, copper and nickel. But we also have some fantastic opportunities in the renewable energy space. And there's further investment in hydrogen. And there are, certainly significant projects looking to pursue Australia as hydrogen exporters to the world. And so I think what you're seeing in Australia is a response that measures the way in which our traditional fuel supply arrangement to the world starts to migrate into how we can participate in a more complex energy solution future. And I know that the LNG industry, for example, continues to see future for LNG as a product that augments energy supply as the world starts to transition to a more renewable future. So I think what I see from Australia is a very optimistic sort of framework, which now needs to have the right investment attracted to it and policy settings to really drive some of the outcomes that our markets are looking for. Where, when I say how lucky we are, I looked at a map the other day. Within a 10-hour flight of Australia, more than half of the world's population lives. And that is in a sector and a region with forecast accelerated growth for the next decade. So clearly Australia is in a really great place and position, and it needs to work with the sort of advantages of the legacy of a big fuel supplier gives us as well. Now, how does that compare with, and what lessons can that deliver for other countries? For example, India. I think, what Australia is seeing is the pace of change, and really the way to sort of leapfrog and put yourself ahead of competition is to focus as much as you can on the future and start to diversify what may hold you to the past. And so I think where Australia does need to improve is its investment in innovation and technological change to more rapidly participate in the future. And these are the types of opportunities where countries like India, I would have thought, have a great opportunity. And that is to really push the sort of pedal down to the floor on developing technologies, particularly on the production of metals, the processing of the raw commodities, to start to position itself as the producer of choice that's been able to crack the nut of greatly reducing carbon in the production of steel, in aluminium, high energy intensive industries, and really take that production mantle over. So I think that's a long way of saying focus on the future with technology and innovation, take carbon out of production processes, and really hold the space as your own.
Right. Thank you, Trevor. I think you summarized it quite well. The 5 things you mentioned about how companies are transforming, and I guess it is applicable not only to mining companies, but the entire ecosystem of mining and metals companies. And very key points you mentioned about how stakeholder communication is undergoing change, and how people are, how the board is re-looking at those KPIs in the context of this change. And one important thing you mentioned about Australia is the scope and the amount of change that they will go through. And in a sense, India will also have to go through a similar amount of change as we migrate away from our sweet spots. And we are a very large importer of oil and gas. We are a very large producer of coal. And the problem which manifests itself for Australia in the form of sales opportunity, that same problem kind of shows for us as to what do we do with all these people employed in such large way in these kinds of fossil fuel industries. I think, and these have implications on all the players who are involved in this panel. And I think we'll have to contend with it today. Thanks, Trevor, for your inputs. I would just like to ask Mr. Verma that you are seeing transactions, overseeing the transaction landscape in this country, in this natural resources sector. So how do you see the bounce back happening from COVID-imposed lockdown? And do you see this prolonging the shift towards carbon neutrality? Or do you think this is going to expedite the shift towards carbon neutrality? This COVID-related, what shall I say, distraction for the last 1 year.
Yeah, so Niladri, am I audible?
Yes, you are.
Okay. So as far as, bouncing back of transactions is concerned, sometime, towards the beginning of June and July, we saw transactions reaching at about 19 or upwards percentage of what they used to be prior to, the COVID happening. And if you look at coal, the amount of coal which has been auctioned, on our platform during the first 2 quarters of this year is actually significantly higher than, what was auctioned during the same period last year. If I'm not wrong, nearly 45 million tons of coal has been sold through our auction process, as against some 25 millions, odd millions which were sold during the same period last year. So as far as the auctions, quantity of coal through auction, that's significantly higher. Overall, the dispatches from Coal India are only about 3% less than what they were same period last year. Metals, of course, if we just talk about Q2, it's actually much higher than Q2 of last year. So metals is when I talk of metals, I'm talking in terms of steel. So there, I would, actually, from the month of October, I find that, the bounce back has been complete, at least in the categories that we deal with. So, which is, like steel, then, we are talking in terms of coal. There are agri-commodities, which we also deal with, which were largely unimpacted by, the COVID. So the sale of wheat and rice was, wasn't much impacted. You talked about, net neutrality. You were talking about the, impact on emissions and, how the emissions are going to reduce.
So I would like to share, if I may correct myself.
Yeah, sure.
I wanted to know that is COVID going to create an acceleration towards this move towards carbon neutrality, or is it going to decelerate or is it going to distract us for some time regarding this march towards carbon neutrality, net zero, climate change?
Okay, so honestly, Niladri, I'm not sure in terms of to what extent COVID would accelerate the march towards, as you call, carbon neutrality. But what COVID has definitely, helped is in terms of, underlining the role or importance of digital connections. I mean, now everybody, all companies are actually looking in terms of how they can digitize their process, how they can connect with their customers and suppliers digitally. And in this discussion, one of the discussion which I can relate to is, and it's not directly in terms of say carbon neutrality, but many steel companies are actively talking about recycling, because what they feel is that if they were to recycle, then possibly that would reduce emissions as far as production of steel is concerned. And one of the areas of which steel companies are talking about now is in terms of, can we have a very efficient mechanism of collecting scrap, okay, that can be recycled into fresh steel production. And that is where M Junction is looking in terms of whether it can play a role in terms of connecting people who have scrap with people who need scrap, so that there is an efficient mechanism of collection of this scrap, which otherwise gets rusted and gets wasted, and for it to be recycled and to be used in production of steel, and in that manner have some sort of an impact in terms of reducing emissions, which otherwise a steel company would need to do if they were to make steel from, say, fresh from virgin iron ore. I'll take a pause now.
Right. So, I mean, thank you for giving us comfort that the bounce back is complete with effect from October. And definitely some of the things that you mentioned about COVID not really affecting. I think the summary that I kind of took is that it will not really affect, but it will in terms of this push towards carbon neutrality. But it has definitely brought about some changes in our way of working, which will have some implications on carbon neutrality or reduction of emissions. Yeah, so either reduce travel, more digitally connected.
Right.
Definitely, yeah. I'm seeing that even Government of India, where we work with them, those people are now extremely comfortable on these platforms. They don't insist face-to-face meetings, etc.
Right.
So, my next question is to Mr. Maheshwari. While people is getting restricted, material movement is not going to be restricted, and I hope and the logistics sector, I think, kind of bounced back quite quickly. Many of those items being essential items. Just wanted to know from you, this march towards carbon neutrality, net zero. How do you see this affecting traffic? By traffic, I mean material movement at the ports, material movement around the country, whether in terms of coking coal movement getting supplanted, say, by steel industries migrating towards hydrogen-based steel making. So how does that kind of impact volumes? How do you see coastal movement and all these other various initiatives impacting volume for players like JSW Infra?
Thanks, Niladri, for that question. I think basically, essentially, port sector is on the service industry, so it serves what is being served to that industry. So, but having seen that, largely the port sector is bulk commodities. If I have to look at it, it is serving to the power plants or the steel plants, which is essentially coal and iron ore and the stuff. Looking at the way the innovations are happening in the energy sector, and it is at such a rapid pace. Thermal coal, which was seen as not a replacement, not a replaceable cargo anywhere in about 10 years back, it suddenly is not a commodity of choice. So I would say future of coal, all of us know that it's very, very bleak, especially thermal coal, if I have to look at it in the immediate context. And I personally don't see any growth in the thermal coal volumes in the port sector. There could be smaller increases in some couple of years, but thereafter there's a plateau and thereafter there's a decline. So I think any further investments coming onto the thermal coal sector for handling capacities would not be a very great move, because energy sector is the growth is coming largely from the renewable energies, whether it's a wind or solar or hydro or other stuffs. Another sector, another source of energy which is developing very fast is power from water, breaking the water into hydrogen and oxygen, and thereafter oxygen is generating power. So that will further create problem for the other source of powers. Good for the environment, good for the overall benefit of the planet. But for the port sector, definitely it's a reduced volumes in the years to come. Especially when we see the seaborne trade of globally of thermal coal is close to about, or coal is close to about 900 million ton or billion ton. And if you see that suddenly this commodity is not of a favorite commodity, and if it starts diminishing, it has a cascading impact, whether it's a railway line, whether it's a whether the mining sector, whether the port sector, the shipping sector, whether the oil consumption sector, everywhere it will get started impacting for the betterment of the climate change. But yes, port sector will be deeply impacted with this kind of change in the space of net carbon neutrality. If I have to look at, there are variety of ways by which the transportation and logistics sectors are coming up now. Slurry pipelines are becoming much more favorite for transportation of iron ore. So we ourselves are looking at slurry pipeline now. So if we have to look at, earlier we used to transport by trucks or trains or other modes of transport. Slurry pipeline is very cost efficient, very less usage of carbon, and very efficient way of handling the material. So investments in slurry pipelines will start coming in. Conveyors, of course, it has been a long, used method of movement of material. In one of our locations, we had set up the conveyor of 28 kilometers, which is like one of its unique, passing through the hills and mountains and other stuffs, and getting out of the plant. So all the truck movement was completely stopped suddenly. We were having like about 20,000 trucks coming in, suddenly gone. So it's very efficient way of handling the things. So of course it makes ease of business. Then probably on net neutrality side on the logistics sector, if I have to look at the increasing the railway axle load. We see a lot of beautiful railway systems in Australia or in South Africa or in other places. India is still very, very far behind on those stuffs. If we increase the axle loads in India, probably within the same carbon emission, we can transport more material. Very low hanging fruit. But then those kind of innovations are now started working on into railways also. Especially designed wagons are now very much permitted in Indian Railways. They are very open to ideas. We have designed 3-4 type of wagons now, and we are implementing it very fast. So this way, we can bring down the usage of energy while transporting the material. So far as port business is concerned, probably more efficient equipments are there to handle better cargoes. You have deeper draft ports. You have your ports are capable of handling bigger vessels, which uses less carbon. Waterways usage is now quite the Indian government is giving a lot of incentives for usage of waterways. We as a company, as a JSW infrastructure, probably we are one of the largest to use Indian waterways. We do about 15 million ton of cargo through Indian waterways, and we do about 10 million ton in coastal shipment in addition to this. And this will double up next year. So our entire focus is on the Indian waterways and the coastal shipments and all. So we are minimizing our usage of road transports or our dependency on the railway, because that's where the carbon consumption is more. So our steps and efforts are towards reducing the. One thing is it's economically very viable. The other thing is that it's environmentally friendly, and you can move volumes. That is again a very, very important aspect. Controlling trucks and trains is still very, very difficult. So movement of volumes are happening through waterways or ships or through inland waterways. So I think if we have to look at it, port sector will be questioned in terms of thermal coal volumes. So far as steel making raw materials are concerned, coking coal specifically, if I have to look at carbon neutrality, that would also come under question after a decade or so. Looking at the new technologies being developed for hydrogen based and all the stuff. and scrap generation started to increase in coming years, especially in China and thereafter into India. We could see, there's a lot of change in terms of usage of iron ore also, and thereafter coking coal. So I think no further fresh investments people are looking at towards the coking coal side, because we see a plateau there also coming in. Of course, India will remain a big market for coking coal for at least a decade or so, but it will eventually reach to a point wherein it will start having a decline in the import sector. So I think all in all, as the world marches towards carbon neutrality, port sector will have to rediscover themselves every now and then. They cannot sit in a comfort zone and sit, okay, 50 years we can run on this model, which is not going to happen. So we have to keep on reinventing, keep on relooking, reassessing our asset base, and then invest in the areas which is likely future ready, like as what Trevor has said regarding LPG or LNGs. So we are looking at that. So probably, hopefully, you will be seeing JSW Infrastructure having an LNG terminal or LPG terminal very soon. So those are the things we have to get future ready. So this is one sector which cannot sit and relax and everything will fall in place as what is designed. It's going to be changing very.
One again dramatic.
Niladri, thanks for giving the opportunity with all the stalwarts in the industry. Thank you for that. I must say that over the years, there are a lot of technological innovations has come. And the steel industry was always the pioneer in terms of giving a lot of technological inputs. The amount of modifications or innovation the steel industries had, the non-ferrous industry doesn't have that much, but it has always learned from the steel industry. Now the plant, what we are going to set up at Mundra will be the world's largest single location plant. Now, as a matter of fact, there is always a focus from the perspective of sustainable technology uses in terms of the technology selection is concerned. And therefore, what we are going to use the technology is highly energy efficient. And not only from the energy efficiency, but it is also got impact with respect to the lowering the water consumption. And when you talk about the energy efficiency, it is not only the waste heat recovery, which is a standard format for any metal industry to recover the energy from the hot gases. But like in the non-ferrous industry, we also produce the sulfuric acid as its byproduct. And now, generally, the fertilizer industry, which are the standalone sulfur-based sulfuric acid plant producer, they always has got a technology to recover the heat from melting of a sulfur, the acid production. And now these technologies has come back into the metallurgical-based sulfuric acid plant. So we are going to have the heat recovery system from all the areas from the sulfuric acid production. Be it acid cooling or be it gas cooling system. So generally, the gas cooling is a standard feature in terms of the metallurgical based sulfuric acid plant. The acid cooling is always is a cause of concern, but there is a different way the heat gets recovered. So we are looking to recover the heat in the acid section by production of the hot water and get the heat recovery from the hot water. So in nutshell, on the smelter side, we are going to use all the hot gases heat recovery by two ways. One is with a waste heat recovery system, and therefore getting into the steam and then power production. In the other areas of the smelter, it will be a hot generator recuperator, so that all the gases, all the process fans which are going to use for the burners will be using the hot energy and therefore reducing the fuel for the furnace heating as well as the melting of the furnaces are concerned. Over and above that, there are new technological developments which has happened in the metallurgical industry, like a porous plug system. Similarly, like in the steel industry, there are the porous plugs are there. So similar thing has been introduced into the smelting industry, and this is going to help to reduce the fuel consumption. The reason behind it that a lot of churning is going to take place when the metal bath is going to be stable, and this churning is going to help to have the uniform temperature within the metal bath, and therefore your heat energy requirement comes down. So these are the various things which will be used in the copper smelting area as well as in terms of the sulfuric acid plant. Similarly, in terms of phosphoric acid plant, we are going to use the vacuum pumps for the acid concentration system is concerned. Generally, the steam ejectors is a standard feature, but what has been seen over the years, there is a ineffectiveness in terms of the steam ejector for the heating of the phosphoric acid, and the people has moved for the vacuum pump system, and now you don't have to produce the steam, and therefore you don't have to burn any fuel for generation of the steam is concerned. So these are the various initiatives what we are going to take up in the plant what we are going to set up at Mundra. Thank you.
Right. Thank you, Mr. Prasad Surya Rao. My question to Mr. Verma that, of course, Mr. Prasad Surya Rao actually painted a very wide canvas, but I'm just picking up only one item from that, which is in the context of the advent of commercial coal mining in India. He spoke of this mineral index, and coal, you are aware that they have created a national coal index. And with the with this advent of commercial coal mining in India, which is again, I think, the push is under the overall umbrella of Atmanirbhar Bharat. And I read a statement in the newspaper that the ministry is going to bring in some more regulatory changes within 1 month, and they would be auctioning around anywhere between 300 to 400 mines. I just wanted to know your sense as to how is M Junction preparing itself for the change in the market structure as well as in the change in the market mechanisms going forward. A commercial auction, commercial coal block auction being just one driver of that. Or an example.
Yeah. So thank you, Niladhari. So, our perspective is that, all these years, in fact, since 2005, when we started helping Coal India sell coal through e-auction process, the structure of coal industry was that about 80-85% of coal that used to get sold in the country was actually produced by Coal India. So we had Coal India as the dominant producer of coal and sort of a monopoly. They set prices, and that was apart from some small quantity of coal, and I'm talking of thermal coal, more in terms of middlings and tailings, which used to get, sold by Tata Steel and Steel Authority. Now we are looking at a scenario with, with commercial mining, with the start of commercial mining, that there would be several entities which would be producing coal and which would be selling coal. So, as far as we are concerned, we think that there would be a need for for a platform to connect these large number of sellers with a large number of buyers, of coal, and that is where we are actually working in terms of designing a platform for that. We are also very clear that unlike the methodology which is right now working for Coal India, which is more in terms of auction methodology, the new platform would need a different mechanism, and it would be more of an exchange, multiple parties transacting, multiple sellers, multiple buyers, as against the model that we have here is that one or two sellers and large number of buyers. And once we have transactions in coal taking place on a regular and continuous basis, that will also enable the development of a price index for coal. which is a challenge right now because of various issues. Auctions take place at with certain gaps, and then there was of course some work has happened now, but earlier there the standardization was lacking and stuff like that. So these are two developments that as M Junction we are watching for and responding to these developments.
Right. Thank you for your very precise answers. Like the National Coal Index has paved the way for discussion on the National Mineral Index. I am assuming and hoping that this creation of this national platform for or the e-marketplace for multi-party transactions will also expedite the process of development of a proper e-marketplace for all minerals, not just for coal, and will ultimately enable us from a statistical calculation of mineral index to a real-time discovered mineral index, so to speak. Thank you. We are coming to the top of the hour. I would try to now kind of converge and conclude. My question to Mr. Maheshwari, sir, you are going to be seeing increasing material movement perhaps because of the supply chain realignment. Are you as optimistic about this as maybe some of us are, that supply chain realignment will actually happen? It will mean more for our Indian businesses, more in terms, more, it will mean more traffic for Indian ports, coupled with, of course, the existing initiatives like Sagarmala, Bharatmala, coastal movement of coal, so on and so forth? Or are you not that optimistic about this supply chain realignment, the way you see it from the standpoint of material movement?
If I have to look at the supply chain realignment, I think there would be increase in volume, whether we call it as because of Atmanirbharta or something else. In any which case, with this kind of geography, this kind of economy, this kind of population size, this volume increase was bound to happen. Whether even if we don't do anything, the volume will increase. So that is given. Now, how efficiently we are able to utilize it is the question now, which is coming up. Now, when we say Atmanirbharta, it's good to talk about it. It started with the pandemic, then further got pushed with the Chinese aggression. Now, because of the migrant issues, because people don't want to move here and there, so that is also called as Atmanirbharta. Wherever you are, you should be having your own scale of business or your employment over there. So that is also coined into that same term of Atmanirbharta. If I had to look at it, what Mr. Subir Chaki had mentioned, we had an option for placing an order on Chinese company for one of our projects, but we refused to do that. There were two aspects to it. I would say less of sentimental, more of commercial. Commercially, it was more costlier to place an order on Indian company. But then we could see the risk of project getting delayed by placing an order on Chinese because of the uncertain times. So that's why we went ahead with the Indian counterpart. So I would say that was one thing. Now, when we say what Mr. Prasad had mentioned, durustayad, better late than never. So we have already missed the bus in terms of coal utilization. India has one of the largest resources of coal. We didn't utilize very effectively. Now we see a downturn in coal utilization. India was capable of producing about 1 billion tons of coal every year for last 10 years. And we were happy doing 600-700 million tons. What we did, essentially, we imported coal from Indonesia, from South Africa, from Australia, from everywhere else. We have drained our forex. We have never allowed that Atmanirbharta developing then and there. So anyway, it's always better late than never. We have started now. It is not too late. May not be in coal sector, maybe in some other sectors, maybe in terms of production of steel, maybe in terms of production of some other equipment and manufacturing other activities. But what could further push it up would be the basic structural changes, like finance cost is one of the highest in the world. The logistics cost is one of the highest in the world, the train tariffs and other stuff. You're cross-subsidizing so much, and you are making manufacturing activity so costly that will never be very Atmanirbhar anytime. So these are the structural changes which needs to be coming. Royalties on minerals. one of the costliest in the world. You look at Brazil, you look at Australia, you look at South Africa. You compare those royalties and Indian royalties, it's almost 10 times. So how you are going to make it very effectively and efficient production basket if you yourself are killing it one way or the other? So probably those structural changes are required. India will be Atmanirbhar. You don't need anyone else to teach us or to tell us that we should be producing here. All Indians are entrepreneurs. Everybody. That is imbibed in our growing up culture. The only thing that we need to have a proper environment and setup. By virtue of this, we can grow. So Atmanirbharta, if it has to be real success, do the structural changes, make it very competitive as what China did about 20 years back or 30 years back. India needs to do it now. Otherwise, we'll again miss the bus as we have missed the bus in terms of coal. Now, coal is a dead commodity. We have done good with the commercial mining, but then I believe we are very late on that subject. By the time a person takes a commercial mine, it starts after 7-8 years. And by the time it uses, coal is a dead commodity. Then what do? Then the people will again struggle with the same kind of what we have done in the power sector. People have put up the power plants and thereafter they found that there is no power buyer over there at those numbers. Similarly, when you buy the coal mines at such a number, by the time you move, pay this kind of royalty, pay this kind of logistics cost, you will find, the alternate fuels are so cheap. Coal is nowhere favorite. So structural changes are very much required to become Atmanirbhar. The rest, everything will follow. People will find resources to make the things. It's only that they need, every seed is, very fertile. They just need a proper sand and sunlight. It's absolutely that way, I would say. So I think Atmanirbharta can be done, provided we make the basic changes of finance cost, royalties, taxes, logistics cost. These things if these are addressed, everything else will fall in place. That's all from my side on Atmanirbharta.
Right. I will add to this some hidden costs which come up because of the delays in approvals and clearances.
That's way too long. I can give you one example. There is one railway line, Hubli to Ankola, connecting from the west coast of India to the hinterland. There's absolutely no connection between these two lines. That line was approved by the cabinet in 1999 at the cost of 400 crore rupees. It's still not done. The cost now is 3,700 crore rupees, still not done. Just because we say there's an elephant corridor. I respect for the wildlife, I respect for the environment, but then there are ways and means to do it. You can create a viaduct, you can create, overall bridges, you can create tunnels. There are ways and means to do it. It's not that the entire world was a forest once upon a time. We have developed it without impacting too much of the environment. So I don't see, there has to be a will to do it. Rest everything will follow.
Yeah. Otherwise, don't even conceptualize that project and keep everyone.
Exactly. Yeah. You spend so much of money on that.
Yeah. Understood. That's a very valid point. Trevor, you've heard everyone. You understand the sentiments. Involving a wide range of topics, involving a wide range of players from different parts of the ecosystem, I would say, associated with the metals and mining sector. Do you see beyond climate change, this, just as a concluding remark from you, do you see as, apart from climate change, this bigger question of geostrategic realignments around the world also impacting the direction of business or economic growth or trade growth, at least in the Indo-Pacific region? You're 10 hours from Australia, logic in that radius.
Yeah, look, Niladri, don't things change quickly? And so there's been a few factors that have made us arguably become more insular, us being each country, each economy, over the last couple of years. But interestingly, I think that's given a lot of the world an opportunity to see just how difficult that also might make things. As an Australian, I'm always reminded we're a very, very small country. There are more people living in Delhi than there are in Australia. And we are traders. We've always traded. That's what we have. We sell stuff. So it was really, and to put that in perspective, our energy and resources exports alone are $300 billion a year, and just over 80% of that 300 billion is into the region to our north. So we'll call it Asia broadly. Very little of it goes to the EU or the US, very little. So it was interesting to see the signing of the Regional Comprehensive Economic Partnership on Sunday, which is a broad, sweeping trade arrangement. I haven't yet had the opportunity to get into the detail of that announcement. And it was interesting that India had withdrawn from those talks some while back, but it does bring together another framework and another opportunity for what could be a difficult part of the world in a geopolitical sense, with how China starts to, really exert some of the power that it has. It's another framework and an opportunity for trading nations within that framework to talk. And it governs the sorts of regulations that can't be put in place or that could be put in place. So I'm optimistic that that does show that that countries continue to see the merit of trade. And yes, the flexibility of supply chains have been demonstrated to be important. So some alternatives and options are critical. But I do think the essence of the value of trade and the ability to continue to trade is pretty undeniable. And so in my personal view, there will always be change, there will always be challenges, and that will see ups and downs, but I think primarily the world will continue to trade. There will just be some shifts in what's traded and potentially with whom, but customers and suppliers will continue to function. So I think, the pathway to carbon neutrality is complicated enough as it is, and you start to put restrictions on how countries can trade with each other becomes even more difficult, right? Some countries' ability to be neutral or negative in carbon can be then put together with those that can't because of what they're good at. And so the world will need to work together to deal with not just climate change, but also economic good and value. So I'm optimistic. Yes, there are challenges. There always have been, but I do think that the inherent value of trade will underpin a continued relationship.
Right. Thank you. We are part of a connected world, and thank you all for participating and giving your views on this, I must say, very difficult, wide topic. I don't know how to converge. I heard a few themes, very interesting themes that I heard from Mr. Maheshwari as well as from Trevor, that we are probably a nation of shopkeepers and something on those lines. But broadly, I will say that Atmanirbhar, I'm getting a sense, is more temporary, and climate change or carbon neutrality, I feel, is more permanent. And I would like to end by saying two things. First and foremost, housekeeping stuff, that the Enrich sessions link will be made available to you, not only to view this roundtable, but also other roundtables and other panels that happen. There will be some live sessions, and there will be some important officials for which I will send that email to you. You can participate and see those live sessions on 2nd and 3rd of December. And I will send a formal invite to you also in those sessions. So thank you again for your time. I will just give one quotation from Bill Gates that I saw a few days back, which says that we always overestimate the change that is going to happen in the next 2 years and always underestimate the change that is going to happen over the next 10.
Oh,
So we have to be ready for that in between. Thank you everyone for coming and sharing your knowledge with us. We hope to stay in touch. Thank you again.
thank you. Thanks, everyone.
Thank you,
everybody. Enjoy.
Thank you.
So in the next session, we are going to be talking about MET.
MET? You mean the weather? the Met Department? I know it's gotten cold here, but really?
No, Puneet, the mega trends on mobility, energy, and technology. This is set to completely transform the future landscape much beyond our imagination.
That sounds fantastic. Can't wait to hear our next panel